it is the day of the June expiry, and in fact you've got the markets which are building up marginally to their momentum, but you'd have to say that it's a mildly positive start, and we are trading in a very tight range. 51.57 for the Nifty, that's higher by 0.3%. 17,023 is the level that we're working with on the Sensex. The broader markets too showing you the same bit of momentum, so a 0.5 percentage point is what they've gained, and power and capital goods stocks holding fort, while the advanced decline ratio is firmly in favor of the gaining side. Jaiprakash Associates tops the list. It's a gain of 2%. You've got Ambuja Cements and Siemens following suit. NTPC, Tata Power and ITC are some of the other big gainers, and Infosys also looking pretty strong. On the downside, post that block deal, Axis Bank is down 2.5%. IDFC, HCL Tech and GAIL India are some of the other big losers.
All right, a quick check then on the rupee and the currency markets. The rupee is up today. It's broken above the 57 mark after you had some positive commentary coming out from the Prime Minister's office late yesterday. It's gained above 57, holding at about 56.93 as we speak, against yesterday's close of 57.17. So it's up something like 22 paise from yesterday's close. We'll need to see whether it can actually protect these gains, whether it will continue to hold up above 57 for the remainder of the day. Does seem quite likely. What is weighing negatively though on the rupee is the fact that you're seeing Brent crude once again begin to climb up. It's holding above $93 a barrel as all eyes are on the European Union summit, which kicks off later today. It is a two-day summit. The market isn't expecting too much from it, but you have a lot of speculation in the commodity markets where traders are building up positions in the hope that something positive could possibly come out of that summit. So that's the big reason why you're seeing Brent crude holding above $93 a barrel. Now, most month-end dollar buying by oil marketing companies is also over, so that's taken some amount of pressure off the rupee, and that's one of the reasons you're seeing it hold above the 57 mark. In the fixed income markets, what you are seeing is the liquidity deficit, which was at about 100,000 crores just a few days back, coming off. It's currently at about 75,000 odd crores. Remember, there's going to be a bond sale of 15,000 crores tomorrow, and the market has for some time now been looking to the Reserve Bank of India to see if there will be any sort of OMO or open market operations being conducted by the central bank, which in some part will take off the liquidity pressure that the market is facing. An important comment coming out just a short while earlier from the Reserve Bank of India. It is being somewhere interpreted as the RBI saying that there will be room to cut interest rates if inflation eases. Just to clarify what the Deputy Governor K.C. Chakravarti has said at an event right here in Mumbai is, how can we cut interest rates when inflation continues to remain high? So the market maybe should not read too much into that comment. He's just clarifying that as long as inflation holds up at the levels that they are at now, you shouldn't expect interest rates. He actually responded to a question by asking a question, by saying, how can interest rates come down when inflation rates are high? The markets ideally shouldn't be reading into that. It really means that you can't expect interest rates coming anytime soon.